Hi, I'm Ashley Daswa. In this video, we'll provide you with a short update on the markets for the quarter ending December 2024. During the fourth quarter of 2024, high US inflation and strong growth fueled market uncertainty, with investors pulling back from stocks and other risky assets following a great performance in the previous quarter. The US Central Bank signaled fewer rate cuts for 2025, while President Trump's re-elections added concerns over tax and trade policies. Higher bond interest rate made equity less attractive. South African market also weakened following China's poor economic performance. Global equity saw a slight decline of 1% in the last 3 months of 2024, but showed a strong annual gains of 21.2% as measured by the All-Country World Index. Both developed and emerging market equities saw losses in the fourth quarter, down 0.2% and 8% respectively. Global bonds were one of the weaker performing asset classes, with the Bloomberg Global Aggregate Index showing a decline of 5% for the fourth quarter and 1.7% decline for the year. In South Africa, the FTSE JSE All Share Index also declined in the fourth quarter, down 2.1%, though still ended the year strong, up 13.4%. Shifting focus to the rand performance at the sector level, industrial posted a modest return of 0.2%, while financials and resource dragged performance by -1.2% and -10% respectively. South African listed property posted a -0.8% in the fourth quarter, but still delivered a strong annual returns of nearly 30%. The FTSE All Bond Index returned 0.4% for the quarter, while inflation-linked bond returned 0.8%. Notably, South African bonds finished the year with a robust 17% gain, while ILB returned 7.8% both in rands. The US Federal Reserve tight monetary policy resulted in fewer rate cuts expectations, with US inflation remaining high, while South African inflation was lower than expected, increasing the chance of rate cuts in 2025, as seen with the recent 0.25 in January 2025. The rand weakened against 3 major currencies, the British pound, euro, and the US dollar, with the dollar changing by 9.5%. The strength of the dollar was driven by a post-election rally and a strong economic performance in relation to the UK and other developed markets. In summary, quarter 4 of 2024 saw risk sentiment increase as rising US yields and inflation concern pressured equities, while the value of developed markets assets is higher than analysts will suggest. An increase in earning growth across sectors may support equities. The emerging markets show some challenges now, but might yet receive boost if China's economy strengthens. South African outlook continues to be challenged by structural issues, but the S&P revised outlook to stable and potential rate cuts are silver lining. Risks to look for in 2025 include trade tensions, a strong US dollar, and fiscal pressure, all of which will require a balanced investment approach.